Welcome to Upside, where we dig into the real stories that live behind the headlines affecting European venture. Today, with my condolorious surroundings, I am in Bolzano, in Italia, and we have Mads in London, and we have Lomax in Lisbon, so it's a super European international affair today. I read this week, let's see where we go with this, about this US-Indian VC alliance. They're looking to invest $1 billion roughly into India's deep tech startups. And it made me think, should we, is there a vehicle for Europe? Is there a way, and I know what you're both going to say, but play with me. Is there a way to be more systematic? Take the 28th regime to the next level? Is there a way to connect the dots, make Berlin the center of manufacturing, London the center of finance, and be quite structured around how venture and investing and startupping works across Europe? Is there a way to take it to another level? And I'm going to hand over to the floor. Mads, shoot me in the face.
Never. But I would say on the US-India piece, I think for me, it looks like US mega funds cycling excess capital into fast-growing India, which has been a terrific market to be in the last few years. I'm not sure there's super much we can learn there other than that it is fun to be rich and have lots of excess capital you can spread around. And, our dear American friends are doing that. And then I'd say to some extent, kind of this 28th regime you're talking about, it already exists informally in the sense that, London funds invest in the Baltics and, funds from Paris invest in Africa and, people invest in different places. I guess you want to do it more structured. I think I'm probably more of the other school. I think, I want the market to do what the market does. I want businesses and entrepreneurs to be free. I think it's more about making sure that we remove restrictions, that we remove barriers to business doing what business does best, which is innovate and grow and do. And I'd say kind of some of the challenges here, what are some of the things that stand in the way? Stuff we've talked about before. On a per capita basis, Europe has only a fifth of the venture capital the US has. So about $100 per capita versus $500 on the other side of the Atlantic. A lot of that is concentrated on the growth stages in the US. And that's what gives that whole ladder, right? You start with the seed and then venture and then growth, because businesses in Europe that you just don't have as much growth capital. Well, they end up either migrating to the States or they get bought up by US firms. So we need more money here. So there's a big gap there. And again, we've also talked about what happens post growth, kind of once you IPO, and the fact that there just isn't enough risk capital to underwrite IPOs in Europe. So companies go and they list in the US, and again, that's a bit of an annoying thing that needs fixing. We need more money. I don't know if I think we're going to pick up on pensions today. And clearly, there's much more risk capital that's needed and that can be invested in productively, both on the public side and the private side, and venture is a subset of that. So that's where I would take that.
So Lomax, we've done a number of European events, and obviously we knock around with a whole raft of European VCs. Is there a more structured approach, do you think? Is there something that we can do better, differently, smarter?
No, I think you need to let chaos reign at the early stage, quite frankly. I don't think, in my experience, anything top down really works. I think, as Mad says, you need to let the market and market forces take hold and encourage that. Clearly, there need to be guardrails, which the Europeans love doing. But I think you need to let chaos reign. We already have enough. Europe, where 60% of LP capital comes from, the European governments or European states. So you've already got a large structured or structural government-led intervention in the sector. If you're looking at, you're sitting there as the private equity industry, they don't have anything like the level of support that the venture capital industry has.
They don't need it. They mark their own homework.
No, of course, no. Well, now that's a separate point, but they've also had, credit to them, they've ridden off the low interest rate boom, but they've also delivered the performance that the investors wanted. And so I do think when it comes to venture and startups, and I think we might be touching on this a bit later, it is all very well us standing here saying, give us more money, because we know there's a capital gap. We know actually roughly at sort of early stage seed that actually Europe is not so far behind the US. In fact, it may even be the same. The gap is the Series B onwards. It's sort of 4 times the number of 20 million plus rounds in the US than there is in Europe. So we know we have capital constraints at mid to late stage private and also at public, as Mads touched upon. But, you know, performance needs to be there as well. We as VCs, it's incumbent on us to build financial products and performance behind that actually gets pension fund trustees to get off the fence and actually, you know, take something to investment committee and commit to this asset class. So it sort of works both ways. But going back to your question, I think you have to, too much structure is a bad thing, particularly in venture capital. Because if you're looking at, we are at the sort of messy, cutting edge, early, you know, frontier of the financial services industry. And so you need to encourage, provide some guardrails, as I says, but I think you need to let people do what they, you know, what they want to do. And, you know, you talked about events, for example, you know, we go to events together. A lot of that is all private sector initiatives, you know. I don't think if someone in Brussels says, let's create a tech conference somewhere. No. I think if someone in Finland is like, why don't we create this conference in November, even though the weather's rubbish, I'm sure we can do something. And then they go to the government and they say, please, can you give us some money? I think that's great. But ultimately it comes from, you know, entrepreneurs and, you know, Web Summit in Lisbon, which say what you want about it, you know, entrepreneurial set of individuals from Ireland who basically built that and got the support from the local government. But I think it comes from the private sector, the individual, the entrepreneurial. It goes back down to the individuals, the people who want to get up at 5 a.m. and actually build something and have a vision and the ability to execute against it.
Okay. All right. Fair enough. I will park my requests for another couple of months. I might bring this round when I've got some more meat on the bones.
Don't also forget that, you know, don't also forget that any of these top down kind of things, they also get administered so poorly. I just don't trust.
I would never suggest for a top down thing. Just to be clear, I would never ever, because I remember David Cameron turning up to Silicon Roundabout. I was there when he turned up. And it was the death knell of Silicon Roundabout. Yeah. I know what it's like when government touches. However, there's a way to touch and there's a way not to touch.
And also, sorry, I mean, if you're talking about collaboration between, you know, private market participants, like you and I collaborate, we just talked about where we're sitting today. Yeah, sure, we should collaborate. But normally that's driven by profit, motivation of profit. Yeah, I mean, we're all, you know, I don't run a non-profit. But I do, you know, we do have the benefit of working in an industry where the currency actually is favors and this sort of pay it forward mentality. So I think long may that continue.
Well, yeah, more collaboration. Let me come back to the table when there's something more concrete about more collaboration, because that's really where we're going to end up with what I have in my head, which I've articulated.
Look at what this dude, you know, look at what this man, you know, Stebbings is doing with Project Europe. You know, the numbers are small, but again, it's a collaborative effort across Europe, those kind of things, but it's driven by him. I mean, he's not doing it out of the goodness of his own heart. And that's great. We'll, you know, people will benefit from it.
We're talking about other investors. Let's talk about the macro for investors. There have been a number of things which do eventually pair back to investing, startups, our ecosystem, even though they sound a million miles away, like gold being at record highs, UK borrowing costs hitting near 27-year highs. There's massive bond sell-off. There have been a lot of these kind of big macro picture things that will affect how recycling happens, how much money comes into venture, how the whole ecosystem works. There was also a Dealroom pension report, which I loved the title of. The title of it was From Savings to Sovereignty, which kind of, for me, captured everything that's wrong with investing in Europe. Let's get stuff out of the savings pot. Let's get stuff out of the pensions pot and into private markets and into innovation and where we live. So a couple of bullet points before I open to the room. So from this report, the value created by European VC-backed companies has more than tripled in 15 years. Now, this was something that surprised me the most. I looked at that 15-year chart, and I'll put the link to the full report in the comments. But in the last 15 years, we've gone from virtually nothing in enterprise value, or whatever you want to call it, startup value, to nearly 3.5 trillion, which is massive. We are still playing a 30-year catch-up game, but we are growing nearly 5 times faster than the US, which is great. Growth capital, I think, as you mentioned, Lomax, is still the challenge. But Europe has the biggest pipeline ever of high-growth startups coming through the ranks, which I think is extremely promising. The gun is loaded. And also on the pension piece, this is another thing that surprised me. This year, well, actually, these are 24 figures. So last year, we saw 850 million into European VC, the most domestically ever. So almost going back to 2019 figures. So this is great. So I'm going to open up to the room. I don't know where you want to lean. Mads, I'm going to ask you first. How do you draw this kind of big macro investor stuff down into European venture startups and founders?
You're touching on a lot of different things there. I mean, just to touch briefly on the kind of, you talked about interest rates. And I think kind of the thing we've seen, kind of there's gold is very high, there's inflation. But gold is at a record high because no major country is showing any fiscal restraint whatsoever. The US is running kind of 6% deficits, as if we were in kind of the depths of a wartime scenario, whereas clearly we're not. And so gold was always the classic anti-inflationary hedge. And so gold is up, Bitcoin is up, kind of all these things people associate it with, trying to protect themselves against inflation. So people don't trust fiat, and so people are switching into these other things. And that's just where we are. We could wish that there was a little bit more discipline around the public finances. In terms of the European equity gap, I mean, I think for investors, I think you're asking, where is the opportunity? For investors, there's a huge opportunity because we have such a massive equity gap across all the stages in Europe. So we can deploy much more capital at everything from seed through growth to even to post-IPO. The talent is here. You're talking about all these great companies that are coming through. We've built some amazing businesses already at Spotify, at Revolut, at Lovable coming through, right? So they're all showing what's possible. And so I'd say for investors, just a massive opportunity. Let's lean in. It's our time. For the founders, you have to keep your business funded. Without that, there's nothing. And so you might have to go to the US to raise capital. That's what I did, right? I raised most of my money in the States when I was a founder, but you can still build in Europe. There are people that say that it's impossible to build companies in Europe. I said, that's hogwash. You absolutely can build companies here. And I think some of the companies I mentioned before show that that's possible, right? Revolut, what an incredible business.
In this report, if others have time, anyone listening has time to read it, they list all of this 3.5 trillion in enterprise value. They list all of the European companies that have come through over the last 10, 15 years. And it's a very impressive list. I just wanted to double down on what you were saying. You can, and it is, the proof is there on the page.
Yeah, there's some great businesses. There just isn't enough, right? We need more. If we want to matter globally, and kind of this is one of the other things I think we've touched on, is the sovereignty piece that we discussed last time, is if we want to matter globally, if we want to be able to have the force to, decide, chart our own course in the world and not just be caught between other giants, well, then we got to build more great businesses because they're the foundation, they're the bedrock that create wealth for everybody. And then I think one of the things you had in your macro overview was this question of the UK's fiscal position. And actually, the UK gets divided a lot. And I think the last 12 months have not been great. And I think the government has made a lot of unforced errors. But it is worth remembering that the UK's net debt is still below 100% of GDP. And that's actually one of the lowest in G7. The France is, I think, at 113. The US is at 123. And Italy and Japan even further along. It could be a lot worse. I mean, it's not that the UK is a fiscal saint, but compared to others, maybe not as bad. But we do need welfare reform. We do need to free up resources so we can invest in more tech to modernize public services. And again, that's potentially an opportunity if you're an entrepreneur. I do think there will be more investment in technology for public services over the coming years. And if you're a founder, maybe you can build some great tech that can help make education, healthcare, and other things much more efficient. What a great thing if somebody can do that.
Yeah, and we are going to touch on the Isambard supercomputer in a minute, which is being used for a lot of the things that you've just mentioned. But Lomax, what would you pick up on? Where would you challenge? What do you think?
No, I think there's this conflation of in venture and early stage company building and the funding thereof. How much macro matters is something that I think we're still learning, quite frankly. I think if I reflect on the zero interest rate phenomenon, ZERP era, I think in a way that the venture community had almost forgotten how much macro matters and actually was very focused on the micro. I sometimes wonder now, and then what happened with COVID, and now we might have overcorrected and we're almost sort of over-reading what happens at the macro level. And actually building big companies from scratch still really just requires incredible people to work incredibly hard on a big problem and attract amazing talent and execute flawlessly. And actually a lot of that is not affected by the macro. Yes, they need to be able to raise money, but actually if you build a business that is attractive to early stage investors, you will raise money. If you build something that's attractive, you have no trouble raising money. I mean, we've seen that. Why are we talking about debt to GDP ratio in a podcast about startups? I mean, that's not to denigrate what you said, Mads. I think it's hugely interesting and it's a great point. But it's just like, why shouldn't we just heads
down a bill, baby.
I mean, get in the basement and start building. Now, of course, look, we know that some of this matters. Like we know that if you want to build a unicorn, you need to probably raise 250 to 300 million, at least. I think like reflecting on what's been said about Europe is we do have now, if we were talking about this 10 years ago, we would have been like, oh, we haven't got enough big businesses and big outcomes in Europe. Well, now we have a bunch of companies that have reached well in excess of, say, 100 million of revenue in Europe now, right? So you can say, well, that's
I was surprised by the list. The list is big, and I was surprised by it.
But, in a way, the next KPI, which admittedly I don't want to set the bar too high, is, well, for the next iteration of the Mag 7, let's have a European company in there, at least one. So let's go from 100 million of revenue to, 5 billion of revenue. If you're being optimistic about it, you would say, look, European venture and tech and startups is, 30 years behind the US, a number of cycles behind. So this is just catching up. And this will happen. You can be a bear about it and say, oh, actually, Europe is got problems with, mid to late stage and public funding, and it has too many regulations, et cetera, et cetera. Actually, Europe's come quite a long way. If you go back to the micro level, and you
look at a hell of a long way.
And actually, this happens in spite of, if we talked about the macro in the UK, we'd be like, well, growth rates are basically anemic, and there's this hugely negative sentiment. So you've got this like horrible marriage of negative sentiment and really poor data, which, the macroeconomists are going to be very depressed about. And the headlines, tell you that every single day. But again, actually, if you want to go, if you have a good idea and you want to raise seed money in Europe, it's not a problem at the moment. I don't see it as a massive problem at the moment. Long may that continues. There's actually a lot to be optimistic at. And I know you guys see on the ground better and better founders, building better and better companies, having the ability to hire people who've been there and done it now. The number of operators who've taken companies from
that
5
was another
top
point
line to
in
50.
the report, was that recycling piece. From the report specifically, I was very buoyed by having all of that data thrown in and seeing how much pension cash, because we obviously deride it a lot, how much pension cash there is now coming in from European pension funds.
I'll take the other side of that. 850 million is a drop in the ocean.
Yeah, it's nothing.
It's nothing. I mean, we are about 150 billion short a year.
But also, Dan, I one thing you said at the beginning was sort of this concept of like taking savings money and putting it into, venture. It's like, I don't want to over sort of index on the words you chose, but just like this framing of like what it should be is this is a super productive, high yielding asset class, high return, and it's super attractive to somebody who's given the mandate of guarding, the pension, the capital or the savings of pensioners. It needs to be attractive. This is not it's not a charity. This is business.
It's got to come from somewhere. The money has to come from somewhere.
Yeah, but you can put a gun to the pension trustee's head to make him do it. But you need to make it attractive.
But Lomax, let's not forget. I mean, what is attractive for a pension trustee? I mean, they have specific rules they have to follow. The rules differ by country, by the way. But if you look at the big countries, the way prudence rules are defined are not how do I maximize long-term return, right? If I'm looking at pensions, I should be taking a 10, 20, 30-year view. And I should be embracing risk. I should be embracing volatility. Why? Because that's how I maximize my long-term return. But instead, if you look at how the rules are structured, they're focused on two things: minimize fees and minimize volatility. Okay? We are all financially literate enough to know exactly where that points you in the rubric. Minimize fees and minimize volatility means straight to bonds. And lo and behold, that's where the trustees go.
And that's what's happened. And that's what
happens. I completely agree with you. Nobody should force anybody to invest in a particular asset class. But I think there are two things we should do. We should certainly structure the rules so people at least have the notion and the incentives to maximize long-term returns and focus a little bit less on the short-term fee and the short-term volatility. Because yes, if you want a complex product and a high-yielding product like venture capital, you will have to pay more than to buy government bonds. It's a much more complex thing to manage. That's the first thing. The second thing is, we should be looking at the way we put tax incentives on these things. Kind of the tax incentives we put on pensions are massive. What's the point in putting all these incentives on so much capital when a lot of it flows to the US? As a pension saver, I get the same tax break by putting money into Max 7 as I do in putting it into European productive assets. That can't be right. Why are we subsidizing funding for Google and Amazon, right? So I think fix those two things, and I think you'll see a completely different situation.
Don't disagree. I will maybe end this segment, Dan, on the sort of next exam question for European tech is if you look at the current cohort of companies that people are very excited about, which all seem to have an L in them, but, like Lovable, Legora in legal tech, 11 Labs, Synthesia, Wave. The companies that we're all excited about are now doing what? Between 100 and 150 million of revenue. Actually, what happens to them next? Do they get either acquired by like a big US company? Do they sort of IPO in the US or do they actually go on? I don't really care where they IPO, quite frankly. And it's probably better for them if they do in the US. But do they go on to build like 1.5, 2 billion of revenue and big balance sheets and big research campuses and new products? And do they global footprints? Do they do that next? And that's a really interesting kind of question as to what happens in the next, I don't know, 3-4 years.
I think you're hitting the nail on the head. Look at what's happening at the frontier labs. Okay, so Anthropic has just raised $13 billion. It's more than all the companies you've mentioned combined.
Yeah.
And how can you do that? Well, you can do that because you've got mates sitting in one of the giga funds across the road that know you very well. And when you go to them and you say, I have a plan, I want to do a 10 bill round, you can actually get that capital together. Now, try for any of the names you mentioned to scrape together even a tenth of that in Europe. Good luck. And that's why we don't see that kind of capital accumulation. The money just isn't there.
Well, let's stay with AI. We're not going to talk about Anthropic, but we are going to talk about Google and the breakup that isn't happening. We're also going to talk a little bit about Isambard AI. So the UK's newest and biggest supercomputer, it came online, I think, in August, I think. Costing about 250 million out of that $1 billion allocation from Keir Starmer. But there was a question posed in The Economist this week about how does the UK compete as a middling power? It is the 11th fastest supercomputer in the world, and obviously we only have one. There's also, I don't know if anyone's got any commentary on Tesla's Master Plan Part 4. Looked like another shift or a pivot away from EVs into AI, robotics, and sustainable abundance, I think Elon calls it, where he thinks there's going to be 80% of value created from humanoid robots. Although I don't know where that fits with some of the incredible Chinese robotics that I also saw this week, which looked nuts and cost about 6,000. So I don't know where we're going to end on that. More bold promises, I'm sure. I've also been reading about how AI won't take your job, which feels a bit clickbaity. I don't know if anyone wants to pick up on that, but we can happily leave that. But there's lots happening in AI this week. It's not been a slow news week. Mads, where would you kick off?
I mean, let's just touch on the Google monopoly ruling. We spoke about it on the last pod and sort of said, look, Google might be broken up in 5 minutes. They avoided the nuclear option. Google gets to keep Chrome. There's no breakup right now. And as a result, the stock immediately popped 8%. The ruling says that Google must share index and anonymized click data with qualified competitors. And there's an important proviso there that it's on commercial terms. So they don't just have to give it away. They can charge for the data, and they're not allowed to discriminate. So they can't make a sweetheart deal with one firm and then discriminate against another. It's quite interesting. It's not going to destroy the company overnight. Competitors, they may say, have web crawling infrastructure, but they still need Google search ranking algorithm and need to compute to run all of this stuff. So I'd say from a search business perspective, I actually think Google got away very lightly here. And I think there's probably been some toasting in the headquarters. That's also why the share price is up.
It's also interesting from a timing perspective, Mads, when we talked about this before, we talk about our desire for the market to figure this out rather than for judges to figure this out. And actually, the judge did mention the timing and the rise of LLMs is something he took into account, which is that, Google is now starting to see challenges to what it's doing. And actually, so in a way, he sort of was doffing his cap to this, competitive threat that they now face, which they didn't face, 6 years ago.
I found that remarkable, absolutely remarkable, and very unexpected from a judge, but interesting, and I think probably the right ruling in many ways.
Maybe he used ChatGPT to do his judgment.
Yeah, how should I judge the Google breakup? Thank you so much, Sam. Lomax, anything on the Google, anything else on the Google stuff before we talk about this kind of this UK middling power with our with our new supercomputer. But what?
No,
anything
other than
else on
just
the
like
Google piece?
trying to think about how the Google thing ties to Europe. In a way, I don't think it makes much difference. In a way, some of the European law already kind of enshrines some of this stuff that the judge has pronounced. So actually, I
But
think
Trump
it
is still
doesn't really-
after big tech, isn't he? This is what I couldn't quite fathom. And I don't know if either of you know anything on this, but it felt like there was some kind of backroom conversation. Obviously, completely, I have no clue, but it felt like, but that was quite a get out of jail free card that was just supplied to Google. But it looks like Trump is still after some form of breakup or some form of control over big tech.
Well, the administration has said that they are going to come after big tech and wants to sort of start to, if not dismantle them, then at least cut them down to size. So yes, the ruling was surprising in its leniency, and whether it was to judge sort of, I don't know if there were obviously lots of judges are anti-Trump, so whether he sort of took a look at what he says, if that's his policy, I'm going to go the other direction. I don't know.
Yeah.
But it's clear the DOJ has said they're not done with big tech. They want to come after them. I think the one that's safe for now is Nvidia. He really does like Jensen, and he's firmly behind him.
It's basically whoever is in Trump's good graces for that week gets a pass, gets the pink pass. Because I know that he obviously hates how Europe then tries to digitally tax big tech. So there's all these kind of conflating things that are baked in the same pie. I guess we'll see how that plays out. But I imagine that'll be on a whim, or his magic 4D chess that Trump is supposed to play, or is it just on a bloody whim? Right, let's talk about Europe competing as an AI middling power. Mads, you've got some notes on this.
Well, I mean, I think the question that was asked is, how Europe can compete as a middling power. And I'd say
That was the commentary, yeah.
Yeah, congratulations to kind of the folks that built that new Isambard cluster. I mean, well done and great work and all that. I'd say it's not by building a 6,000 GPU cluster that we compete. Just for context, I think the price tag for this was 250 billion pounds, and that's in the context of the hyperscaler spending 320 billion on data center capex this year. So it's just we're not really playing, we're not really on the field. But it's nice, but it's not really moving the needle. I would say let's focus on getting the basics right. You can't be an AI leader if citizens can't interact digitally with government. And we've been hopelessly behind there. We need digital ID. We need to make sure that 100% of government services are digital, because that's a prerequisite for automation. And then we need to figure out how we unlock more money for investment. We need to reform the state. We need to fix welfare with 300 billion pounds annually. That's where the money is, right? We're putting so much money into welfare right now, and we're struggling to afford and investing in the tech that can modernize public services and get the economy growing again. So I think, Lomax, you've been talking about how being the world's best AI adopter creates self-reinforcing advantages. And I think that could be, that's what we should do. So kind of focus on some of those basics, and then back to we absolutely must unlock pension capital to get more money into productive assets in general. And of course, a lot of that will be around modernizing things with AI. So it's not sexy, but it's real. We got to get kind of talent moving across borders. We got to get
That's
capital.
my favorite tagline you've ever come up with, Matt. I'm gonna have to enshrine that somewhere.
There you go. So yeah, back to basics. Get the basics right, and let's go from there.
Yeah, I think becoming a user, I think to your point, Lomax, from a couple of weeks back, I think it absolutely rings in my ears. Let's become super users. Lomax, what else have we missed? Where else?
Yeah, I mean, it does feel like a consolation prize. It's like if you can't win, you have to go and become a power. Yeah, exactly. But I think it's something, and it's a start, and it's better than not doing that. Because clearly we're never going to have the capital to compete.
But also one quick thing on this, we're not looking to build foundational models. We are looking to use these kinds of supercomputers to create efficiency in public services, as an example. So it's not like we need, I don't know, exaflops of gigawiggles to do the stuff that the hyperscalers are doing. We need fundamental usable technology that can automate public services and science and medical research, or whatever it might be.
There's the public service angle, but I think they've said that there's 80% of the use cases of the projects being used on Isambard are either health or life science. So some of which will have a public service angle through the NHS, given the government provision of healthcare in the UK, but some of it will actually be more broad than that. Will be new potentially new drugs or new treatments, etc., which then creates and spurs and grows your life science industry, which, don't forget, UK still, despite its best efforts, is one of the leading countries in the world for life science. I do think that there will be, it's not just about public services. But generally, yes. I mean, going back to what we were saying earlier just now is become a power user, talent, make sure that you have this, the UK is an attractive place for talent to migrate to, and it's permissible. And the application layer is not lost. It's up to
I think
grabs.
it's still all to play for. Still all to play for how all this stuff actually gets applied, because we are now seeing stories, aren't we?
Yeah, the UK has the talent, the market. The UK and Europe has the talent, the market to actually build some big businesses there. I mean, some of the companies we just talked about. So I think that is something that is up for grabs.
I was reading a report in the FT today that was that I don't know how they measured this. Allegedly, 1% of businesses asked had applied what they called something like a consistent or a fully deployed AI strategy. So I think we can take the numbers with a pinch. Whatever that number is, it's a frighteningly small number of businesses that are applying AI properly and fully at the coalface, which I do believe is where we can play.
Yeah, I mean, there's still a ton of businesses that aren't even digitized yet. It's just, yeah.
Anyone got any comments? I don't know if you read the Tesla master plan, and the first thing I did was look at who else was building humanoid robotics. And of course, I first looked to China, as I was mentioning before, and what they've done for no money. And these are already commercially available humanoid robots, which we can argue whether that's a healthy version of robot or not to have in the house or in the office or wherever. But they're doing them for like $5,000, $6,000, $7,000. Let's talk about Xi and this the parade. It was to commemorate the end of World War II and obviously mainly the China-Japanese conflict. But it was a massive military parade. It was tens of thousands of people. The armory, the robotics, all on show. It was quite we were talking in the office about the robo-wolves looking super cool. And it did look like a bad script for Team America 2. I was looking at Xi's suit. He's got the mouse suit rather than a Western suit. And it was comical on one hand, but extremely scary looking at all these authoritarian leaders. You've got, I think there are about 20 odd countries there, mainly, my own personal opinion, but the worst of the worst when it comes to authoritarian leaders, apart from two ex-Kiwi prime ministers, which looked ridiculously out of place. But it did feel a bit like an anti-West axis kind of gathering. So I don't know, Mads, I'm going to start with you. Where would you like to start on this Chinese massive show of strength?
The comfortable world is over, right? Since the fall of the Berlin Wall, Europe could be complacent. US hegemony was benevolent. We didn't need to worry about defense or supply chains. And all that's come to an end now. I mean, this parade for sure formalized the new reality which is here. The US unipolar moment is definitively over. Big Daddy in Washington either won't or can't kind of quote unquote protect us anymore, right? That's over. So we got to think, I think, quite realistically about the new world we are in. That's not to say that I think there'll be a world war tomorrow. I don't think there will be, but there will be fierce competition for resources, for minerals, for energy, for all these things. And if we're not careful, we'll be squeezed to third or fourth place. And then we can give up all these great things we want with welfare state and long holidays and all these wonderful things we've taken for granted in Europe for so long because we had the economic position we did. Well, guess what? If others have a much stronger economic position than us, something we'll have to give. Now, China is now the world's dominant manufacturing power. They control the means to make both goods and weapons. And we know that the US won the Second World War through manufacturing supremacy, and that's China's position now. The Chinese industrial policy has been mocked as wasteful, but it's delivered results, and they make the best drones, the best EVs, and many of the best autonomous systems. And those are really foundations for technology that could be frightfully powerful in a conflict. So, if you think about it, the G7 combined still has a stronger manufacturing base than China alone. So it's not that we're in a situation of sort of total Chinese hegemony just yet, but they've certainly stolen a march on us, especially in automotive. And that should be a massive wake-up call for now. I think we could talk about that every day and still not talk enough. But, you should just talk, right? But the action. But this is huge. This is such a big shift. But 10 years ago, people would say the Chinese will never be able to make cars that will compete with our cars. Well, guess what? They did. And they are absolutely hammering the European automotive sector. So another thing to remember is that China is operating a successful economic model in many ways, unlike the Soviet Union. So, it's likely that China will continue the rise, unlike the USSR that sort of just collapsed by itself. So, what can we do about this? Well, we have to trim back the state, both spending and regulation, and grow our economies. There is no other way. We've got to be, very direct about kind of strategic sectors, make sure we focus on strengthening those. And we can't afford to be pushed around by the US. We saw the tariff discussion over the summer as a great example of just how few cards we hold sometimes. Because the risk is if we don't, we become irrelevant, and there will be this bipolar world between China and the US, and we're just relegated and can't sort of decide our own future, and that's a real risk for us.
It was Kim Jong Un and Putin that kind of drew my eye to this axis of evil.
Yes, but it was also India. It was also,
that was sad.
From the Middle East. So this is the new reality.
Yeah,
I
get it. I get it.
But that's the thing. We sometimes say, well, can't we just be Switzerland? Can't we just be like them, be friends with everybody? And yes, we should be friends with everybody. We should trade with everybody.
But Europe's going to do, right? Europe has no choice but to do that.
Yes, but the truth is there is no neutrality. The new Switzerland is the Middle East, right? Old Switzerland got slapped around with tariffs for neutrality. We used to say, there's this old saying, right? Divide and conquer, right? And when the Romans said that, it meant divide your enemies so you can pick them off one by one. Because we know what happens when you don't unite. And so that's what we must do. Like Trump, he absolutely hates the EU because they're harder to negotiate with than smaller independent states. Switzerland that stood outside and on their own, they get slapped with much bigger tariffs. So I think, again, European collaboration, it's our only chance in a world that's otherwise is dominated by a still very strong US and a rapidly rising China.
Didn't bother Rolex profits much, but we'll see.
It's difficult to know precisely, but do you know what the GDP of North Korea is?
It was something like 27 billion, and I think Russia's deal with their conscripts has tripled it or something crazy.
Okay, well, let's just say it's 30. Maybe it's 40 billion dollars.
Yeah, it was
tiny.
Negligible until Russia was paying $2,000 a month per body died to go and die in Ukraine.
I mean, I'm sitting in Portugal where GDP here is like 10 times the size of that. And, it's just probably most US cities are bigger than that. And sorry, the point I'm making is North Korea is an irrelevance as an economic unit. But it has nukes.
It's relevant as a nuclear unit.
Exactly. It has nukes, right? It has a big stick. And then it gets paraded around on the front page, has front seat to these kind of big military parades. So the point I'm making is the defense capability, exactly what Mads was saying, is pretending that, we can invest we don't need to invest in defense anymore, and we can invest all our money in the state and looking after each other, etc. It's failed. It doesn't work. So we go back to, we've seen it, we've talked about it before. We now need to invest in these capabilities to have that big stick. And not only that, collaboration is key. So you need to see the collaboration. I think the only thing I would add, so I totally agree with everything that Mads said. We have basically for 30 years given up on defense. And I mean, I nearly joined the army, guys, after university, and I didn't because I just saw the budgets getting whittled away. I was like, this is pointless. It's going backwards.
Really? Was that it? Or was it not wanting to be shot in the face?
No, I mean, I quite fancied a bit. I backed myself in that kind of scenario, or I did at the time, probably not now. Now I'd be...
You'd have been an officer, my darling. There's no way you'd have been a squaddy.
Exactly.
You were at Sandhurst. Don't give me that bullshit. You weren't going to be a grunt.
Yeah, I'd be what in Blackadder terms with, Captain Darling and General Melchett.
You'd be waving from the back. Yeah. Bye, Jens.
But no, my point is this, it's basically fully agree with Mads, but, we now have to invest both in the industrial base, the manufacturing base, and the defense capabilities, and we need to do it together. Probably to add to what Mads was saying, we need to do that not just as Europeans. Ideally, we do it with the US. I mean, Trump's not going to be there forever, so there will. I am optimistic of a more collaborative approach with the US on a 5-10 year lens.
Can we forgive them though? If half their population is going to vote for a character like that? Again, I know that's judgment that you hate, Mads, but is that not?
I mean, one thing that I think we've all learned is the unilateral powers that the presidential position gives you, which quite frankly, it doesn't have, most European democracies don't have, the president does not have as much power as what the US president has. So, I mean, I don't necessarily, I'm happy I'd be very European about it. I'm happy to forgive and move on, quite frankly, particularly with the country with the biggest defense budget in the world. Still, let's not forget that, because what the US has run basically a military economy ever since World War II, still like you could almost call it, a martial society. Final point is we should collaborate more openly with democracies in Asia. It's global.
It's happening. I was looking at some of the EU strategic plays. It looks like what do they call it? The Asia Pacific. It's not the stuff that doesn't include China. There's Japan. That whole region. There's a lot more trade activity going on down in that part of the world. I was looking at how things were being rebalanced with the trade uncertainty with the US and obviously the China challenge, and what's happening in LATAM and what's happening in across the Asia basin. So I think there'll be more to see on that. I have a deal of the week. Lomax, you have a deal of the week. What's yours? I think we're both in quantum land, aren't we?
We are. Quantum is literally, quantum is hot, is absolutely pumping at the moment. Let's not forget, we had the IonQ exit out of Oxford Oxford Ionics sold for $1 billion to IonQ, 2 months ago. And now we have, my deal is literally just announced a few hours ago, which is Quantinuum, which used to be Cambridge Quantum Computing. So it is a UK company of origin.
We'll take it.
Raising 600 million from NVIDIA at a 10 billion valuation. So in the interim, I think 3 years ago, Cambridge Quantum Computing teamed up with Honeywell in the US to create Quantinuum. And that is now raised at a fantastic high valuation from NVIDIA. And it was only in January that Jensen was poo-pooing quantum. He's changed his tune.
It's quite hot,
it seems,
because there's another European quantum company, IQM. They've just hit $1 billion in valuation. I think they're from Finland, if memory serves.
They are. IQM are from Finland, yeah. And if you look at IonQ, which is the big listed company I just referred to, which bought Oxford Ionics, I mean, their stock is up, I don't know, 8-10 times in the last 3 years or something. I mean, it's
so quantum watch this space.
My personal view is we have a quantum winter to come. I think there's over one more. There's been a
how
few.
How long was the AI winter? Was what, 30 odd years, 50 years?
No, I think as always with quantum, you never know. It's always 10 years off, as we've talked about. It is getting more concrete, but we still have a long way to go on quantum. I think there's a bit of over exuberance now. So
I'm often reading about photonics, but I kind of have to give my brain a rest because my brain can't compute how it all works. Mads, what's happening with you the rest of the week? How are you? What's on your agenda? What's cooking with you?
I'm in California next week.
California,
wow,
yourself.
Kissing the ring. What are you up to?
It's the All-In Summit. So gonna be there with Demis Hassabis, CEO of DeepMind. It's gonna be the CEO of Arm, CEO of YouTube.
Mads,
CEO
you are
of
the
Uber.
ultimate All-In fanboy. I love it.
Yeah.
Do you have to wear fancy dress at the All-In Summit or not? No.
Probably some Italian brand Giamatti he's found for us.
He'll be in some SPAC that he's punting. Lomax, before I get even more derisory, Lomax, what's up? What's on your agenda? What's happening with you? Well, how's the weather down in Lisbon? You still got the sunshine?
It's amazing. Yeah, it is amazing. I mean, look, unfortunately today we're all mourning the horrendous accident that happened, 500 meters from my front door, with multiple deaths and injuries. So it's a bit of a lugubrious atmosphere, quite rightly here. No, apart from that, we are doing the final 2 investments out of this fund and looking forward to first closing the new fund. So all good.
Let's do it. Well, my lovelies, thank you so much for your time and your brains and all of your good juice. And I will catch you next week. Upside.